Okay, welcome to webinar 4. As you can see on the screen, there's two images and there's a couple words, flags and pennants. That's what I'm going to be covering in webinar 4. This is all part of the straight trend line series of patterns. So a lot of what I'm going to instruct here is going to be very similar to what you've already worked with and already done. And I'll give you an example. This is a flag, of course. A flag has a flagpole, okay? And then a flag is also represented by a rectangle shape that comes off of the flag. So you've already worked with straight trend lines in your channels and wedges and triangles, and you've worked with a rectangle shape in your channels. This is basically a channel. Top line, bottom line, okay? And then over here, the pennant, which is usually represented in the sports arena, also has a pole. Okay, you see a straight trend line. And then the only difference between the pennant and the flag are the converging lines on the pennant, similar to your symmetrical triangle. They come to an apex. Alright? So we're going to be discussing different versions of these. Some are going to look exactly like these, and then some are going to be different versions. We're going to cover all of them, and flags and pennants. Hopefully you enjoy it. Here we go. Alright, this is Priceline. Go back 20 years. Got a little thing going on here. So this, I'll go here first. This is what a flag, basically a textbook flag, is basically going to look like on your stock chart. Okay? It's amongst all the price actions, so that way you get the real life view. And this is what it's going to look like. It's going to have a flagpole. Sometimes they might be straight up and down, as you saw on the American flag. Okay? Sometimes that might happen. Many times it will. And many times your flag will be perfectly rectangular, just like in the picture of the American flag, but sometimes it won't. And generally, this is what you want to look for. This is a textbook bull flag. You have a pole, and the pole, of course, is just a line that we draw from the bottom of a trend to the top of a trend, and then you have what's called the tilt opposite. The flag, instead of going sideways or tilting upwards, is tilting down opposite of the direction of the flagpole. Okay? In trading, we call this a retrace. I've mentioned the word before, but I want you to get familiar with that word, because that is a very common word that traders use. And it's going to come in play into other patterns and learnings. So this is called a retrace. And what a retrace is when a trend is going in one direction, when it stops, it retraces its steps, if you will. It pulls back. This is a pullback. You probably heard the term pullback, correction, all those sort of terms, right? They can all be intermingled and intermixed in however you want to say them or use them. Just like I always told you, when I talk with the advanced traders, we'll change the word triangle for wedge sometimes, and we know what each other is saying. In the basics of learning, you want to learn the exact terms for the exact pattern. So in this case, it's called a retrace or a pullback. Price is pulling back from its prior trend. In this case, it's prior uptrend, pulling back down, and then ideally should then continue its way in the upward direction. So what's interesting about this is that if we take some of your prior learnings, okay, such as from webinar 1, the sideways channel, we have an uptrend going into the sideways channel. See this? The lowest point starts, and then it stops here, and then it begins this really nice sideways channel. Look at that. Real nice price action, as you all know from your findings of sideways channel. So that's really pretty. So you get the uptrend going into the sideways channel, which implies that price should break out and go upwards and continue this prior uptrend. And then what that makes the channel is just a simple rest, a consolidation, okay, or an area of indecision. So you have the bulls taking it up, they get met with the bears here. It's a complete area of indecision and rest and consolidation, and then the bulls, probability-wise, should win and take it upwards, the measure move of the channel, as we know. From the bottom to the top, we project that from the breakout point. And that's exactly what happened, coincidentally enough. Uptrend, sideways channel, bullish breakout, continuing the prior uptrend, and this bullish breakout happens to be the pole, P-O-L-E, the pole of our bull flag. So you can start to see how you can start meshing patterns together. All right, I'm not going to ask you to do that in your next challenge, but we will eventually start meshing and blending patterns together. But you can see how they work together just simply by looking at the channel. Remember this here, if it doesn't complete, this is very, very finite price action, so you got to look real closely. But if you remember, if price doesn't come back down to touch the bottom floor, then that's bullish, but it's basically bouncing off the bottom floor. It's just a little sideways action, whatever you want to call this, okay? This is a little tiny channel, if you will. The last candle bottom is going to start our uptrend, okay? You could start it here, the uptrend, but the pole's not going to look as pretty. Because if you started here, see all the price action is hanging out here on the bottom, so it's not as pretty. So remember, it's an art as much as it is a science. So you want to look at the art aspect, and that would be at the end of this little action here, the bottom of this candle is going to start your pole. Alright, so let's imagine that the pole's not there. Well, we know that this sideways channel is going to measure move from top to bottom, right? So the top is 550 bucks, let's say. Okay? And then the bottom is 450 bucks. So 550 minus 450 is 100 bucks. We're going to measure move $100 from the breakout point, which is here. Okay, $100 above the 500 is going to be 650. And that's just right around here. Okay, this little area of price action, this cluster of price action here is where the target is, and that's why price acted and behaved in the way that it has here. That's why it kind of stopped and went sideways, because of the measure move. Not that I'm going to get into this too much because I already covered it. I just want to show you that our pole, starting from here, you run it up, okay? This is all going to be price action that's already on the chart for you. So is this, okay? This might not, or it might. It doesn't matter if you find it the day of the break, the day after the break. Okay, let's say that we, find it the day after the break, like this. So you're going to see all of this in reality. Okay, you're going to see all this in reality, let's say. So you're going to draw your pole from the bottom of that trend to the top of the highest point of the trend before it retraces and pulls back. Alright? So let's take all this away. Let's take all this away, because it's not going to be there, of course, when you look at your chart. You're going to have to spot it. That's the hard part of trading, and that's also the fun part of trading. Alright, so this is what you'll be looking at. You come across price line back in, let's say that we're living in 2012 right now, because that's what this is. And you come across this price action. You notice the channel, and you notice the breakout. You do your measure move, right? And it comes to here, you know, and you enter, and you have your stop, and your confirm, and all that crap. And so then it comes to here, and that's a nice trade, right? And then you say, okay, it's that reach my target, it's time to get out. Well, another trader might come in and they could draw their pole starting here where you ended. You could do that because that's the start of a new trend technically, even though it's still part of this entire trend. And then they would draw, because they spotted it, a flag. Alright, you can put your lines anywhere you want. So it'd be something like that. And that's a flag. And the trader spotted it, and then the trader would trade that pattern. So you would have missed out on that had you not known what that pattern looks like. Or if you were really good, after you got out at 650 from your measure move of the sideways channel, then you would look at it and you would say, wait a minute, I notice from here, looking back to here, is a pole, P-O-L-E, and then you notice this retrace is a flag, so you draw it. Now you're getting a 2-for-1. You got this trade, and now you're going to get this whole trade. Okay, so that's how you can really capitalize on price action, knowing chart patterns. So you draw the pole, your flag is going to be the retracement of the price action coming off of the pole. Now let me give you some definitions here to help you understand flags better. Flags appear as small rectangles. This is our small rectangle. Okay, your channel is going to be a larger, wider formation. You can have a little tiny channel like this, and we do call them channels, and we do talk about them as channels, and they are tradable technically, but I'm talking about your channel patterns, the big ones. So this is like a smaller channel, falling channel, if you will. So that's where a lot of the other learnings come in. You already know what a falling channel looks like. You already know what to look for in a falling channel. You want this up and down price action, and you're getting it here. See? See the zigzags? That's pretty good. A lot of the space is covered. It's pretty good action. You already know to look for that because you know how to do falling channels. It's the same thing, it's just smaller. So this is a falling channel, and it's smaller in size and it's smaller in time. Alright, the best flags are slanted, tilt opposite or slanted or retraced against the pole, the uptrend of the pole, and you want the flag to be tilted downwards, because remember, downward patterns break up, right? Upward patterns break down. So you want this to go down so it'll break up. And the reason why that is in reality is probably because you have lower lows, you have lower highs, and we all know that that means that the bulls are winning. Excuse me, the bears are winning. They're pulling it down. They're pulling the bulls down. Okay? So, generally what that implies is that the bears are selling. This is all selling, basically. You know, there's the little buying, of course, but it's a selling formation. And the reason why they're selling is because they saw the channel, they saw the breakout, and this huge run, so the bears are scared. not only did it meet the measure move here, so this is all basically extended price action. So the bears are trying to pull it back down to here, to the 650 area where the measure move is. Okay? Just to make themselves feel good about themselves. But they're pulling price down because they feel that this is so extended, they got to get it to the price to go down. Whether it's profit taking, whether it's scared bears being shaken out, whatever it is, this is going down. And we would think that it's going way down, like all the way back down to here. Because that's generally how price action works. It goes up and then it generally goes back down to where it came from. But in this case, when it's a flag, it doesn't do that. And it shakes out these bears that are scared, and then that's why the bulls step in and then take it all the way up and continue what they were doing. The bulls are doing something here. The bears step in and interrupt that, and then the bulls ideally continue doing what they're doing. And that's how these continuation patterns work. Now you'll notice that the price action surrounding this pole is really nice. This is what you want. See how price hugs that line real nice? See that? It comes off just a little bit, just a little bit, just a little bit, just a little bit, but it's hugging that pole. That's what you want. You don't want price coming all the way, off of it. That's not a good pole. If price were to come out to here, and stuff like that, and up here, that's not as good. You want price to hug that pole. Okay? So, the flag is mounted at the end of the pole, at the top of the pole in this case for a bull flag. When you find the start of your trend, and you find the end of your trend, when there's nothing more higher, that's the end of the pole. And then your flag is going to start. It's going to come off of that top. Okay, and ideally we want it to fall down in a tilt pattern or tilt formation. Now, if you have a tilted pole like this, that's ideal, as I said. You're also going to see poles that are straight vertical. Okay, that's fine as well. And you're also going to find poles anything in between, and that's all fine as well. So anything from straight to a 45-degree angle. Now when I see 45 degrees, if I put my mouse here, the tan lines create a 90-degree angle. You see that? See the tan lines? They create a 90-degree angle. And so basically this pole is 45 degrees. Okay? Might not be exact, but it doesn't matter. This is a straight up 90-degree angle pole. And then this is basically 45 degrees too. So, call it what you will. The thing with the straight line poles is, these straight line poles are going to be straight line price action. Probably only 2 or 3 days. It's going to be real large candles as you've seen before, straight up. And so they're going to be faster and they're going to be more volatile. So they might not be for you. And I would recommend you, as a newbie, to find these poles that are vertical. Not only do they trade better when they come out of the pattern, but it's a more relaxed type of pattern because this is going at a nice angle, which is slower. See the pattern, the price action? It's slower and softer and more mellow and easier. When it's straight up and down, that's a very aggressive price action. You'll probably have a very aggressive breakout. When you have an angled 45-degree angle pole, you'll probably have a nice 45-degree angle breakout, which is going to be easier for you to trade, handle, and control. Okay? Of these particular patterns, 64% of them meet the bullish target. And now, what is the bullish target? The bullish target is this. Take the bottom of your pole, take the top of your pole. You guys know how to measure move? That's exactly what we're doing. Nothing you haven't done before. So the top of the pole, let's call it 775. Okay? The bottom of the pole, let's call it 475. That's $300. That's a $300 measure move. Okay? It's a very long trend. But guess what? It's going to do the exact same thing. I know, it sounds crazy, but it's going to move 300 points again. So how you do that is you take the bottom of your flag, which is this particular candle right here, the lowest. You guys know how to do this too. You did it with all your wedges and everything. You find the lowest point, which is the bottom of this candle, okay, which we'll call 675, and then you add 300 to it. 300 plus 675 is 975, and that puts us right about, I'll put it at a 45-degree angle so you can get a sense of how those trade. And it puts us about right there. Okay? That's your target, 975, because you took this $300 pole, you moved it from the bottom of your flag, and it met and your target is 975. Now, obviously, this didn't really work out. Don't worry about that. As you know, I don't care about that stuff. I'm just showing you patterns. That's how you measure move a bull flag. Now, trend can be any direction leading into your pole. It can be downward, it can be upward, it can be sideways as this one is. It doesn't matter. Trend can be any direction leading up to your pole. Alright? Even if you have a downtrend into your pole, it doesn't matter. It doesn't mean that you're going to get a downtrend here. It could imply it, as we know, because I said that trends like to continue themselves. And as you see, this is why the bears will get scared. If this was a downtrend, and then you go up here, this is why bears will get scared and be pulling this down, because they think this is going to continue here as it looks like it's doing. And it very well could. And that in and of itself is a whole other pattern that I'll discuss another time, but it didn't. And the reason why we know it didn't is because it formed a flag. And when you know what to look for in a flag, then you start to get confident and you don't worry about the prior trend as much, because you know that this flag is a flag because it has all the components of a flag. Alright? And so the price will fluctuate between the flag just like in your channels and your other patterns, up, down, up, down. You want that progression and you want the ups and downs and fluctuations. Now here's how you know this is a flag. Let's say that there was prior downtrend again, like I said, and then here we're thinking it's gonna, continue this downtrend here, and that's why everyone here is getting scared. The reason why you know it's a flag is because flags are less than 3 weeks. One trading week is 5 days, so that's about 15 candles. So once you get your 15 candles, 3 weeks or less, I don't want it to be just a few candles. Pros, we do trade like 5 candle flags, but that's not what we're doing here with new traders. Okay, you guys want 3 weeks or less. Probably the less you want is like 12 candles to 15 candles. Somewhere in that range would be pretty good for you. So this one has, here's the top of the flag. You can consider that one of your flag candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This can be considered also if you want 12. Alright, so this is 12 candles. So once this candle breaks out, as you know, that's our breakout candle. Now we start to get a sense, if this was a downtrend, this is not your normal downtrend continuation. We got something going on here. And so if you spotted the pole and the flag and the breakout, you might say, hey, wait, a flag might be happening here. So let's not worry too much about the prior downtrend into the pole. We have enough to worry about here. So you got your 12 candles, you got your breakout candle. It's breaking the top of our flag. Okay, And then of course we have our confirmation candle here that closes above our break. And then as always, new traders, you're going to buy a penny above the confirm. Okay, so you're going to buy right there at about 7:30 something. And you're in. 64% of gold flags meet their target. So that means that you have a break, you have a confirm. I'm not saying that right now, at this point, there's a 65% chance this is going to meet that measure move all the way up in the 900s. That's going to happen above the top of the flag. That's where you're going to get that probability from. This is just a little short trade that you can do. Okay, and we're going to do it. You're going to break, you're going to confirm, you're going to buy a penny above at 737, whatever the heck it is, and you're going to trade it up to here, 775, the top of your pole. That's one trade. Okay? Now, a lot of traders don't do that trade because it can be sporadic, it can be a little bit, indifferent, if you will, because you're within this area. But I do it, and I say that you can. If you get a break, you get a confirm, you can trade it up to here because that's where it's probably going like a magnet. Here's where the confirm really comes in, and the 64% that I'm talking about. All right? Your next trade, just like you've done with your patterns when you have your entry exit within the same pattern, all right? The breakout of your, say, symmetrical triangle to the top of your triangle, and then you trade it again above that high of the triangle. It's the same concept. So there's really nothing new here. So you're gonna buy you're gonna buy it here. Generally, in real life, you're gonna want the break and the confirm, buy a penny above again. But I don't have you guys do that because it'll get too confusing for you. So I keep it simple. On the second entry, I just have you buy it at the same price as the high, just to make it easier on your eyes, your charts, and your mind. So once price, if it does, breaks here, the top of your pole, that's your break, okay? Here's your confirm. You're going to buy a penny above the confirm. So, you know what? Let's do it, because I might as well get you into the idea and understanding of doing it. So, if you get a break above the high of the pole, you get a confirm above your break, buy a penny above the confirm again. And then you're going to ride that bad boy all the way up to your target, which is the distance and height of the pole, projected from the lowest point of your flag. Okay? And so once you get this confirmation, then there is a 64% chance this trade is going to meet this target. Now that is really good. That's a really good percentage, and I'm even going to increase that percentage a lot higher in just a second. But I'm going to explain to you how I get these percentages. All right, I follow somebody. There is somebody out there. There is someone who has written books, somebody who has done quantitative analysis. I'm not going to tell you who it is right this moment because I don't want you guys skipping ahead. But this individual is one of the most popular and famous and well-known people in the industry, and he does not trade stocks. He does quantitative analysis on stocks. And what he does is he takes the S&P 500 and he takes the past 25 years, which is basically what this chart is anyway, and he takes only textbook patterns. All the patterns that I've had you finalize, all the heck that you went through to get to those final textbook versions of those patterns, he only takes those textbook patterns that he finds in the S&P 500 stocks of all the chart patterns, and there's probably like 100 of them or whatever, and he does back testing, and he does quantitative analysis of exactly how those textbook patterns perform, and then he takes that data and then he produces it for traders like us. So whenever I'm giving you these percentages of, a breakout of a triangle should be 74% from the way to the apex, that's where I'm getting these numbers from. It's all 100% real fact. It's real science. It's real quantitative analysis. It doesn't lie. It's textbook, and it's as good as it gets. So you can bank on my numbers. Not many people know of this. Now, like I said, he's famous, he's well known, but as you can see in the trading community, everyone has their way of doing things. Some traders, most traders are so lazy that they don't even bother to read books and things. So a lot of this stuff that I'm teaching you gets thrown under the rug by most traders. If you go into StockTwits, or if you talk to traders on Facebook, most of them don't know even 1% of the crap that I'm teaching you. And it's all in books. It's insane to me. But so I'm trying to make your lives easier by giving you these webinars, and you will be reading the books after all of my teachings. Don't think you're not. You will, because there's things that need to be filled in, gaps that I'm not telling you about. Gaps of knowledge, gaps of information that you need to learn, you need to study, and it's going to make you 100% a complete professional trader, making money, bankable money in the stock market, week in, week out, year in, year out. All right, so 64% chance once you get a confirm on this bull flag, it's going to that target. Pretty darn good. All right, and then before we get to that point, once we're spotting our flag, right? Like this is going to be reality, right? You don't know what's next. That's the fun part of trading. You have no idea what's going to come next. So here's our flag that we're drawing. We don't know if we're going to get another few days to make it a perfect 3-week flag. We don't know. But right now, we have ourselves a textbook flag. Okay? When we're here on the 12th day or 13th day, whatever, we can go ahead and anticipate a breakout anytime soon. That's fine. At this point, there's a 54% chance this is going to break out upwards. And now I know that sounds a little bit random. 54% is not that great, but I think that it might even be more. I don't really believe so much in that number. I think you can have a higher probability in mind that this will break up bullish, but at the same time, you don't have confirmation, so that's why it's still relatively random until you get the breakout. Because this could do what we said, pull all the way down or be very bearish, because that's where it's heading. So just keep that in mind. There's a 54% chance it can break out when you're in the flag. And so you don't want to trade inside the flag, of course. You want to trade the breakouts because they have the higher probabilities. Now also what you'll notice is that when I measure moves, the distance of the pole, you'll notice that the flag is the exact halfway point, because you got your $300 move here, and then you got your $300 move here. That puts this at the exact midway point of that trend. Okay, so that's pretty cool, and that's something to notice. Is that what you're looking for is this flag tends to look like just a little resting area, and then this thing continues itself all the way up. So that's just a nice little tidbit. This is the exact midway area of a perfect pattern. If you get a pullback, now I discussed pullbacks when I was talking about triangles and stuff, when they break out, when the pattern breaks out from the flag, okay, you could get a pullback as you're seeing here. It reaches your first target and then it pulls back, and then generally it's going to pull back to the breakout area, and that hurts performance is what they say. But you can still trade it and it's still okay, because these pullbacks are good because they shake out the sellers, so that way the buyers can come back in and take it up. But they say that it hurts performance on the pullbacks on these flags. They don't hurt performance on the triangles and all the other patterns, right? Because it shakes out. But this is generally the same concept. You get your breakout, maybe that's about 3%. Remember we talked about that? I don't know. it pulls back, and then it might go ahead and continue up. It's just something I want you to think about. We want these things to just skyrocket and take right off. Okay, we don't want these pullbacks. If you get them, it's not the end of the world. Just know that it might be a little worse performance coming in the aftermath of that. But we want these things to just shoot right up. Flags are one of the best patterns on the market. I'm going to show you something that's going to blow your mind in a second. But traders love trading flags because they are generally very easy to trade. As you can see, they're kind of calculated real well for you, and they're also phenomenal performers. It's real easy. Up, little retrace, boom, continue. And they're easy, they're quick. You can just get a nice quick couple days swing. You can ride the trend. There's a lot going on there. So traders love them. And they're just one of the best patterns to trade for traders, meaning visually and aesthetically. As far as this flag, it's not always going to do this. Okay, I'm going to show you other types of flags that you want to stay away from or that you can trade, and different types of what these will look like, and other improper ones. But this one is called a high and tight flag. Okay, high, H-I-G-H, high and tight flag. And what that means is the flag in and of itself is high. Okay, meaning the flag is high up in the air, and tight because of the tight price action and the tight trend lines. See how tight this is? So this is called high and tight. This is a very specialized type of flag because this is actually, you ready for it? The #1 best performing chart pattern on the stock market. I'm going to let that resonate for a second. Okay, yes, I did just say that. This that you're looking at right now is the #1 best performing chart pattern on the stock market. Right there. The high and tight tilt opposite flag with a nice flagpole at a 45-degree angle, perfect fluctuating price action within 3 weeks or 15 trading days. Now, it didn't work, as we know, but again, I don't care about that. I'm just showing you how to spot perfect patterns. Now, I can get into how this is the #1 chart pattern on the market, and I could spend an hour just talking about why. I'm not going to do that, and you shouldn't care. All you should do is spot it, calculate it, and trade it. Now, here's the best part about it, and this is why it's the best. When you have this textbook high and tight tilt opposite flag, and you get the break and you get the confirm right here, when this confirms right here, there is a 90% chance of meeting your target right here. Now, this is the 10% where it didn't happen, but that's because we didn't get the confirm above the pole. See? It hit our pole and then it fell. But if you get the break above the pole and the confirm, and you buy a penny above this confirm, there is a 90% chance, 90, that's insane. You will never find that in the stock market or anywhere else for that matter. That probability is off the charts, but it's real because I told you that it was found by this exact textbook pattern being spotted in the S&P 500 and all the 500 stocks over 25 years. Do you know how many trades that is? How many patterns that is? Thousands and thousands and thousands of these bull flags, textbook found, quantitative analysis done, and 90% of them, once they confirmed, met this target here. Insane. And that is why some traders only trade bull flags, love bull flags, and are just bonkers over bull flags. So you can be too. But it has to be a perfect textbook pattern in order for you to have that confidence. And there it is, right there, spotted. Price line, You can look at 4/17/12 is the date in that area, and you can go back there and look at it yourself. And that right now that you're looking at is the #1 best performing chart pattern in the entire stock market. There's no better. It doesn't exist. If somebody tells you it does, they're wrong. They're lying. They have no idea what they're talking about. This is real stuff. This is real facts. This is a real pattern. This is an exact pattern. It doesn't get better than this. This is what you want to look for when you're doing your challenge on the bull flag. You want to find a high and tight tilt opposite. The flag tilts opposite of the direction of the pole. You want to find that break confirm. 90% chance that thing is going all the way up to that measure move of the pole. Okay? Now, here's another thing to look for. If you go back to the idea that when we did the measure move of the sideways channel, right, it came up to here about 650, okay? And we'll just call that half of the distance of the pole, because that's kind of what it looks like. It looks like half, right? This is probably half, because this particular gap that I'm not going to really discuss, but this particular gap is a continuation gap, and they usually occur at half the distance of a trend. So this is probably more or less the half point. But what I want to discuss here is another fact about these flags, and that is this: these flags generally retrace less than 36% of the pole. So if you know the 50% mark, right? We'll call that 50. You can probably divide that into 2 right here and call that 25%, right? This is probably 25%, something like that, right? And then so between 25 and 50, we can assume that 38 is probably about right there. So that's a perfect, 36. That's a perfect 36% retrace. So that's also going to help you out. When you're looking at this breakout from the channel, right, and then you get to your measure move right here from the channel, then you have this extended price action, and then the bears start getting scared and selling, right? If you can mark this retrace at 36% or less, even 25%, then you have an idea a flag might be forming. And that's going to help you get a little bit step ahead of the game. Just like here, when this doesn't pull all the way down to the bottom of the channel, it's an idea for us that it might be bullish and going up. When these flags stop at about 36% of the flag's distance, that means that you might have an idea that this flag might be stopping, or that this might actually be a flag. And it did. It stopped, and then it broke out perfectly. Okay? So look for that. Break your pole up into quadrants to kind of help yourself. 36% or less, you want your flag. If your flag, I'm going to show you ones that go beyond 36, and they're improper patterns. You know, they come down to here, and you'll see that they look wrong. They're too long. You don't want that. So 36% of the pole is where you want your flag to stop or less. I would say 36 is a very nice distance, considering we only got about 12 candles. So you want about 15 candles. It'll come to about here usually at 36%. Okay, so that's what you want to look at. And so that's basically the bull flag. The high and tight bull flag is your best performer with the opposite tilt, and a 36% or less drop and stop of the pole. 45-degree angle, pole distance, extend that from the bottom of the lowest candle, extend it up. You can trade inside here, break, confirm, penny above, go up to the top of the pole, and then you can break, confirm, penny above, and then you can trade, continuing your measure move, and you can get 2 trades out of it. 64% chance of a regular flag, and I'm going to show you regular flags that trade sideways and stuff. When they confirm above the pole, 64% chance they're going to hit the target. That's really good. perfect textbook high and tight flag, 90% chance it's going to hit that target on a confirmation. Alright? Now I'm going to show you some flags so you can get an idea of what's good and what's bad. So these are all bull flags right now. Okay, here's a flag. You got your sideways action, so you know where to start your flag. This pole is not so good because we have this huge wick, which we would prefer it to be a body, right? We got this crappy little candle, so that's not a good pole. And notice here, there's no fluctuation in the price action, just single candles. So I don't want you guys producing these kinds of charts with these single candles. You're going to find them all day long. This is an improper pole. Some improper bull flag. Some traders will trade this, and as you notice, it did go up and it did work, okay? But it doesn't matter to us because this is not what we're looking for, because the probability states this will not work. So we want to stay away. Alright, this is a good looking pattern bull flag. You have downtrend going in. We don't really care, but you do. Okay. Bottom of the downtrend starts your pole. Draw your pole upwards to the top of the trend when it stops. We have price action hugging this pole pretty nicely. Okay. Now you start to notice that, you know, they get gaps in these poles a lot of times. And that's called a continuation gap, as I said. It starts the trend, and then you get a gap that continues the trend, and the gap's usually at the halfway point. That's just the way that gap works. I'm not going to get into gaps now. But so you want price to hug the pole as much as possible. Here it came off it, so you know that's not the best. Some traders would even draw their pole here and just go like that. You can do that. I don't like it because it's a little short, you know, pole. And that means you're going to get a short projection on your target and you might cut yourself short. And also you can see how nice price action does hug this pole. So try to get the nice long poles that start and stop at the bottom of the full trends, and you want your price action not to come out like that, though it is acceptable. You want to stay as close to your line as possible. Now here I call this loose. This is called a loose flag, and this is it's not that bad. I would probably accept it as your challenge. If you draw the zigzags, it's not the end of the world. Okay, still kind of, but there is a lot of black space. So this might be up for discussion if we'll accept it or not. But I probably wouldn't. You got to get little gaps here. Crappy candle, crappy candle, crappy candle. All this black space, crappy candle. All this crap. So you got a decent flag. You got decent price action. But it's not perfect. If you want to go out there and look for a better one, do so. Also, as you notice, and what you're probably thinking is, this flag does not retrace and tilt downwards. It goes sideways. Okay, which is fine. You can find those flags as well, and I'll probably ask you to chart those as well, and they will work just as great, but not as great as the ones that tilt downwards, because as you know, patterns that tilt down break up. Patterns that tilt up break down. Patterns that go sideways do break up also, but they just don't have that kind of power that we're looking for in a flag. But this would be fine. I'm not going to tell you it wouldn't, okay? The sideways flags are fine, and they are just as acceptable as downward tilts, and they're really nice looking, and it's fine. So I would probably accept this. Maybe a little bit of discussion, but as you notice, it didn't work out anyway. So that probably has something to do with some of this poor behavior within the flag, and the fact that the flag, it tilts down a little bit, so that's fine. I'm not going to really get into that too much as far as the tilt. There's tilts and there's sideways, and they're both going to be fine. Tilt is better. Sideways is fine. Alright, here's another flag. Great pole. Price action sticks on it real well. And then you just have daily candles inside, which we want nothing to do with. So even though it's a tilt type fluctuation, you have no price fluctuation. It's just single candles, and we don't want that. Alright, here's another one. You got your flag. This is fine. I prefer the flag to be a little longer and more legitimate. This is a little bit short, but that's fine. But notice how long the flag is. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So there's like almost 25 candles. Okay, so it's too long. You want your flag to stop right here probably. Or right here, which is even too long. Okay? So that's not a good flag. That's the one that we first covered. Price line 4312. Alright, same concept. You got your gap here that has been occurring a lot. You got your 2 days. I would prefer, another day or two to build this flag. And then there's just single candles inside the flag. You do have a nice tilt, but single candles are not going to work. There's no fluctuation of price. Alright, same concept. Sideways action. Here's your bottom of the trend. Here's your top. Flagpole's not bad, but there's just single candles. So even though the price, obviously, as you see, did scream upwards, which is insane and awesome, but again, we would not trade that because this is not an appropriate flag. Single candles, no fluctuation, too loose. That's called a loose pattern. Alright, this looks like a real good one. So you have sideways action. It's just a coincidence, all the sideways action. Bottom of your trend is right here. Okay, or right here. Draw your pole. Notice how price is hugging this pole real tight like. That's a real nice pole. Okay? Top of the pole stops. And look at this. We got the tilt. It comes down. Count the days. You can include this in your count or not. I don't care. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11. You can call this part of your count if you want. 12. Okay, so we got 12 candles out of 15. That's pretty rocking. Now, you're probably not going to trade this inside of this area because you got your break, you got your confirm, and then if you're going to buy a penny above your confirm, there's really no trade there. 47 to 47.16. So don't worry about that. You're not always going to get that trade, but it doesn't matter. This is another beautiful textbook high and tight flag, opposite tilt. You got your pole. When you're going to buy now, you're not going to get into this trade obviously because you didn't get the break, you didn't get the confirm. So it saved you, right? You're looking for the break, you're looking for the confirm. And then you would have bought a penny above the confirm. We take the low and we take the high of the trend. The high here is 47 bucks, we'll call it. Okay, the low is 41, we'll call it. That's a $6 measure move. Take it from the lowest point of the candle, of the flag right here. Okay, that's 45, and we're going to add 6 is 51. So it's right about there. 51. So that's your measure move. And so you notice the flag is halfway the distance of the prior trend and the post breakout. If we happen to get the break and the confirm, you buy yourself a penny here, You got a 90% chance it's going here because this is a textbook high and tight flag. Why is it high and tight? You got a beautiful pull where price hugs it. You got a nice tilt. You got good price action. You got enough candles, 15 or less. Now, let's see where this thing pulls down to. Okay, let's just eye it. This is 50% of the pull. Probably down a little bit. Okay, so this is probably 50% of the pull, right? And then here's 25 probably. So this thing stopped at 25, 30 at 30%. We wanted 36% or less. So that's in the ballpark. So that's perfect. This is a textbook high and tight flag. Though again, it didn't work. You know, sorry, that's just the way the market is. There's no rhyme or reason. Like I said, we could sit here, we could dissect it for hours. We don't have that kind of time. But as to why it didn't work, but as you notice, what actually happened here is this rounding top pattern started to occur. We didn't know that when we spotted the flag. It looked beautiful and fantastic and everything was grand. But after it broke it down, you know, and this is how we get saved. This is why you guys love breakouts and confirms. You save yourself. If somebody would have bought here on just the break of this little, you know, wick, you would have got whipped out. It's not worth it. When you wait for confirmation, it confirms the trade. Since we didn't get that, it saved us for all this pain. And we couldn't get in this trade because the breakout day was too long. Our retrace here is not deep enough, so we couldn't get this trade going. No big deal. But as you notice, it broke out to here, the top of the flag, and then it pulled back. It retraced, look at that, exactly to the breakout point. See that? Broke out from your flag, retraced exactly to your breakout point. So that's going to do that quite often. And as I said, when that happens, you don't have to, you know, worry too much about it. You can still trade it if it does break out and confirm above the pole. That's fine. But just know that textbook says it might hinder the performance a little bit. That's all. Doesn't say what it's going to hinder it by. So, but retraces are good in my opinion because it shakes out the sellers. All these sellers are gone. Take that bad boy up with nothing but bulls, okay? So don't worry about the retraces so much. But this did save us from getting in. We didn't get in. And as you notice, it's a rounding pattern here. And that's a different pattern that I would teach you, and it's called a rounding top. And that's what it seems to be doing. Okay? This is a perfect textbook high and tight, opposite tilt flag, bull flag. And this is Bank of America, 1265 is the date, 1265. If you want to go back and look at that. Alright, here's another bad pattern. Sideways action, coincidentally again. Start of the trend, got your gap there. No fluctuation, just single days. That's not going to work. Abbott Laboratories. Alright, same concept. Bottom of trend, top where it stops, it starts to fall. Single days, too loose, garbage. Pole's not that bad. Price is hugging it pretty good. This one did work out again, but we don't care about that. Alright, we covered that one. Yahoo has a bunch of them. Flags are pretty prevalent in the market. You'll find a whole bunch of them. because it's pretty common behavior of traders to create these types of price action and flags. Okay, here's another bad one. You notice it's kind of wacky looking. We got downward price action, but who cares? Here's your pole, bottom of trend, top of trend where it starts. Right? You think this is a flag and it's sloppy, single days, we wouldn't accept it. And then, but look what happens. Turns out this is actually a rising channel. It's a pretty good rising channel though. Right? Look at that. Fluctuations. Not bad. Not bad. Not bad at all. So, what looks like a pole is actually a rising channel. So you got to be careful with your patterns, and as you see, patterns will merge, and we'll get into all that down the road when we're drawing more than one pattern at a time and getting more complex. But here, price hugs the pole, looks nice. Here, the single days tricked you off and told you this is not a flag that you want to be involved in, and then when you remove it, you realize it's an uptrend into a very nice rising channel that, as we know, should break downwards, which it does. Okay? So, don't be tricked by these patterns. Some of them will converge into other patterns. Here's another bull flag, downward trend into the flag. This is a good flag, okay? Just because it's a little stout and short, don't think it's not. You got some solid green candles there. That is really good price action. So that's a fair pull. It's just the flag is no good. Loose, choppy, single price action. That's just not going to fly. Here's one of the inappropriate flags as well. This is called a flag tilt, and it tilts in the direction of the pole, and that's why it's wrong, as you can see. You got your flag pole at the bottom of the trend, the start of the trend, top of the trend, creates your flag, and as you notice, just like the last one, that was a rising channel, very similar, but this is poor price action. Well, it's not that poor, actually. I mean, it's a little tiny channel. It's got fluctuations, so it's not that. It's actually pretty good for a tiny little channel, and that would have been a nice little short trade for somebody, because it did end up kind of going down to the bottom of the channel here when it broke down. But for us, as far as flags go, this is what you want to avoid. This is called a flag tilt. When the flag goes in the same direction as your pole, you want to avoid that, because that's probably going to have a downward resolve. Because remember, upward patterns, downward resolve, okay? So avoid those upward tilts. Alright, I don't know if I covered this one or not. I think I did, but yeah, this is a very nice textbook. I have loose there, but as we discussed earlier, this will work. It's got a little bit of loose black space and all that, but it's probably acceptable. Alright, no good. I think I covered this one too. Crappy candle here, single days. Even though it does have a very nice flag formation, it's only single candles and it's just not going to work. This one's too long. I don't know if I covered it or not. I don't remember, but start It probably did. Here's your pole. Very nice price action, hugging the pole. That's fine. And this would have been our flag up to here, and it just kept going. Even though it did break out nicely, it's too long. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Yeah, so I said there was like 25, I think. It's too long. That's a fine looking flag, the formation, if it stopped there. You could have said that's a nice flag. You know, it has some formations and fluctuations. But it's too long. Alright, this is Facebook. You can start your trend here at the bottom of the sideways action where the trend starts to go up. Draw it up. It does hug price pretty good. You got this funky thing going on that might affect you, might not, I don't know. And here it's swooping a little bit, that might affect you. But it's too long. It's another one that's too long. And you got single days. You know, the fluctuations aren't really that great. You know, they're sort of there. We might accept it as a legitimate, but it's too long. It's probably 25 or something like that days. So you want to stay away from that. Alright, so that's, then we got one more bull flag. Nice pull. Price action hugs it beautifully. Single day candle's not going to work, but very nice flag formation if that was a real flag. So that's no good. Alright, now I'm going to get into bear flags. They're the complete opposite of bull flags, of course. And they serve the same purpose. We're not going to trade them. We're just going to calculate them. But I want you to know them, notice them, spot them, chart them, calculate them. And then when the market turns bearish and when you get better, you can start shorting patterns. There's just no point in shorting right now. Here's a bear flag. This pull is very extreme, as you see. It's one long, two long, and then there's just single days. So that's not going to work. But notice how the pole is vertical. Okay, that's fine. There's no problem with that. And then notice how the flag goes opposite, which is perfect. That's what you want to see. You want to see that opposite tilt. So that's a very nice looking flag. Had there been legitimate price action inside of the flag, we could have called it legit. Even with this extreme price action, that's still a nice pull. But you can expect, say, volatile price action on the breakdown. It's not that volatile, but it could have been. Alright, so that's sloppy, loose and sloppy flag. Alright, here's two flags in a row. You will see this happen because they are pretty common patterns. This one up here, single day candles, not even worth talking about. This one here, again with the gap in the pole, very common thing. Problem is it's tilting with the pole. The pole's going down, so is the flag, and it's also too long. That's probably 20 something days. Alright, so count your days and also make sure that your flag is going either sideways or going opposite tilt of the pole. That's the same for downward bearish poles, flags as well, bear flags. Alright, here, very long day, number 2 long day, that's fine, that's good. No price action inside. I might have just covered this, I don't know, I'm getting confused. But, good pull, nice flag, how it goes opposite tilt. Just nothing going on inside the flag, it's loose, so we're going to leave that alone. Alright, here's another bear flag with the tilt going in the direction of the flag. Single candle price action. Leave it alone. Alright, this is a nice bear flag. You got the top of the trend, prior uptrend going and stopping. That's where you start your pull. Bring it all the way down to where the trend stops. And look how nice the price hugs this line. It's just sitting right on that pull line. That's really nice. Don't worry about a little thing like this. It's not going to kill you. And then when it stops, you got the opposite tilt going on here, which is really pretty. Right? And then price does fluctuate. We have 1, 2, here we go. We got, 2 touches on each line. That's all you need. I would prefer more, of course, as you know, fill in all this space, but I'll accept it. This is a very nice, I would call it a high and tight bear flag. This is probably one of the nicest bearish patterns on the stock market. Similar to the bull flag being the number 1, this is probably one of the top patterns on the stock market. Okay, and then it did break down, retraced. See what you got going on here? It went right to the bottom of the pole, retraced to the breakout point again. See that? And then it went back inside and failed. So this retrace can hurt you. If somebody was shorting, you're not really going to get a good short out of this one either, because it's not good behavior. So this pattern failed, though it is absolutely beautiful. That's just the way it goes sometimes. This one wanted to go later in time, as it did, not right away. We want them to shoot down right away. But when you're doing your measure move, top of pole, bottom of pole, extend from the highest point in the flag on the bear flags and project it downwards the distance of the pole. Okay, this is Microsoft 829, Microsoft 3/22/11 is your date. You can go back and look at this one. Here's another tilt. Single day price action, bearish flag, no good. Same thing. You got your gap here that seems to be happening a lot. You got your pole, single day price action. Sideways flag is great, but no price action, so leave it alone. Alright, this is a little bit better. You got your gap again, you got your pole that's hugging the price action, hugging the pole. That's fine, that's decent. Uptrend, start your pole here at the top. Stop here. When it starts to go up and form the flag, there is fluctuations, but they're single days. It's no good. It's not going to work for us. Alright, this is going to bring us to a discussion and conversation that we need to have. When you did your prior 3-webinar challenge, you had some patterns. The channels, which you notice are similar to our rectangle flags. You had some triangles, like symmetricals, which will be similar to the pennants, which I'll get into now in this webinar. You had some ascending and descending triangles as well. Look here. This is a bear flag, very good. Nice pull. Okay, you got your gap. You got your action, your 3 or 4 day action. That's fine. Single day, so obviously it's crap. But notice it forms an ascending triangle. The bottoms are ascending, tops are flat. You're going to come across those. Okay, I don't want you charting them. You're also going to come across descending triangles on flags. Okay, I don't want you charting those either. The reason is, as you know, the ascending triangle here, as you drew it in your homework, is a bullish pattern, right? It's pushing the bulls up, and it's a bullish pattern. But yet, this is a bearish flag. When the pole is up and goes down, that's a bearish flag. So it's conflicting. Okay, so it might get all screwy like it did here, and just do sideways action or whatever. You don't know. So stay away from those. You're not good enough or knowledgeable enough to know how to trade a pattern within a pattern yet. You will down the road, but I just wanted to show you that. Stay away from ascending and descending patterns. Alright, here, decent pole, daily fluctuation, flag's no good. Here again is what I was talking about. Nice pole, price action's hugging real nice, okay? You can put your pole into nothing. You can just leave it here into nothing. You could stop it there. Whatever you want to do. You could bring it, pull it in and bring it into here. I like to be artistic, and I'll just leave it into nothing like that. Descending triangle. Descending top line, flat bottom line. You know it. You learned it. It's a bearish pattern. It might help out this pattern because it's a bearish pattern within a bearish pattern, but it also adds another element of surprise, and I don't want you doing that now. So leave those descending triangle flags, bear flags, bull flags, whatever it is. Leave descending and ascending alone. Don't chart them. Here's another one. Just nothing going on as far as price action. That's bullish. Excuse me. Okay, this one is decent, it's just too long. Alright, and the pole's not great. I mean, you got your gap. The gap actually is good. It kind of acts as a booster. It kind of like pushes price down, or in the bullish ones, it pushes price up. So, that's, the pole is fine. You just got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10... 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. The flag's just a little too long. Just a little bit. If it was here, that would be perfect. You have an upside tilt going in the opposite direction of the pole. That would have been a real nice bear flag. But just a little few extra days just makes me want to stay away. Same here, sloppy. It has the form of a bear flag, but it's just garbage. So you will come across those.
garbage inside the flag, too long. I think I covered those. I don't know if I've shown you a textbook bearish flag yet. Let me see if I can find one. Alright, this one will do. Start of the pole up here, bottom of the pole here, maybe this candle here. You know, however you want to do that, it's fine. Got some fluctuation going on here. Not the best, but for my purposes right now, it's fine. A little too much black space, but you know, see if we can fill that in with a better pattern. But this is pretty good. You got the right number of days, you got the right amount of time, you got the pullback here. Though it does pull back. If this is half, pulls back to 50%, so it pulls back too far. So that's not going to be good. Let me find another one. Alright, here's a legitimate bearish pull. As I said on the triangles and all the other patterns, when you have these pokers, they give implications and they're fine to have. On your flags, you don't want them, but this is the best I can find for right now, so I'm going with it. You want all price contained within the ceiling and within the floor of your flag, okay? But it's not the end of the world. You can have some pokers. It's not going to kill you, so that's why I'm using this. This is fine. I got some fluctuation going on here. It's covering up the space pretty nicely, so that's why I'll take this. The flag is sideways. That's very nice. This pole is beautiful. Price hugs it really well. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Alright, so this one's too long. We'd want our flag to stop there. So I gotta find another one. Oh, I did have a good one to show you. I forgot. I'm just completely out of it. My sleep patterns have been completely insane over the past week, and so I'm just not 1,000% there as I usually am. But this is the one that I did show you. This is Microsoft in the 3/3/2011 time frame. High off the trend, down. Got your nice opposite tilt. Fluctuation's good. Yeah, so this one's good. Alright, cool. Let's move on to pennants, and then we're done with this webinar. Okay, pennants are very cool stuff. Alright, we'll start with the bull pennants. Okay, now this is a really nice pennant. Okay, this is a really nice pennant, except for the fact that it has a few things wrong with it. Price is coming off of the flag. Price is coming off of the flag. A little choppiness. So that's not the best kind of pull that you want. And then, of course, this is too long. Your pennant usually would probably stop about there, I guess. The only real difference between a pennant and a flag is that pennant will have converging lines. Okay? They're not going to be parallel or flat. They're going to converge into each other, basically like a symmetrical triangle. So, or even a falling wedge, if you will, is what you're looking for, that type of pattern. This has great behavior. It's just too long. So we can't use it. Let me see if I can find a good one. Alright, this one seems like it'll work. Now, so a pennant, let me describe a few things. Just like in the bull flags, it's the same exact measure move. You take the pole, and see here we have sideways action again, coincidentally enough. Start at the bottom of the new uptrend. Draw your pole, Now, since price is popping off above it, this is where the art comes in. You might want to go like this and say, well, maybe this is actually where my pull starts. So that way you got price hugging your pull. Okay, you got it? So that is going to be a big difference, and that's the right place to put it, right here. So that way price is right on the pull. So you take the distance of your pull, take it from the lowest point, which is the far right of your pennant, and then you project it upwards, and that's your measure move. You're not going to really get a trade probably out of from a breakout to the top of the pole, because it's such a small area on these pennants. You might. It just depends on the individual pennant. But this is pretty much textbook, and you can go off this one. This is Microsoft 3/12/12 is the date. Poles are the same. Opposite tilt is the same. You want your pennant tilting opposite of your pole. You want price fluctuation inside, which I got, and you want it to be 3 weeks or less. Once price breaks the top of your flag again, when you get confirmation, okay, say it breaks, confirms, you're going to buy a penny above that confirm. Once you get confirmation, there's a 60% chance that price will meet your target, which is the measure move of this prior hold. It's going to go up to whatever it will. 60% chance it's going to get there. That's pretty darn good. The flags, the pennants, like I said, they look like little symmetrical triangles, or they look like little descending wedges. Not really descending, because the bottom line doesn't really, yeah, I guess they're just sort of descending. More like symmetrical triangles, just little symmetrical triangles. And then, of course, you still want to have that fluctuating price between the two trend lines. Pennants are short, like I said, they're less than 3 weeks. That's 15 candles again, just like the flags. Anything longer than 3 weeks, it is a symmetrical triangle. Okay, it's not a flag. It's a symmetrical triangle, though it would be a very small one in this case. We look for bigger ones. The poles, again, can be 45-degree angles, or they can be straight up and down, or anything between. It doesn't matter. It's just pretty much going to predict the type of price action you can expect to happen afterwards. And it's going to break out bullish on this bullish pennant 61% of the time. So that's actually a much better breakout percentage than you were looking at on the bullish flags. That was 54% they break out. These break out upwards on the bullish pennant 61% of the time. So that's very good. So when you look for pennants, you can expect them to break out upwards pretty much a majority of the time. And these are called workhorse patterns, which means that these are going to work a little bit harder than flags. Flags are a little bit more susceptible to exterior news, to exterior events, to price action around it, to all kinds of things. Pennants are a little bit stronger. They're a little bit more versatile. They will work harder for you in times of toughness. In tough markets, in tough weeks, tough days, things like that, a pennant is going to be a little bit harder of a worker. So just know that you might get better price action in tougher times from a pennant. All right, and then the bear, that's a bull pennant. That's textbook. Sometimes the pennant is an actual point like that, and that's fine. In symmetrical triangles, we don't want it to come to the point. In a pennant, it can. It's no problem. Okay? It can get as close to the point as possible. It doesn't matter. It really doesn't in these small pennants. It's fine. So sometimes they might be very pointy like that. I don't know if I have any examples of that. I'll try and find one. Here's an example. It's not a great one, but it will work. It's a tad sloppy. Nice pull, right? Price action's hugging real good. And then you can draw, I just drew this just so you can see it, The lines might actually be a little different. But I just want you to see what a symmetrical triangle pennant would look like. So you got your converging lines up and down, and then you got your price action in between. So that's pretty good. And then this is a bullish pennant, so price should have broken out, which it didn't. It went sloppy sideways, so there's obviously something wrong going on here. But I mean, I would accept this. Maybe there's a little too much black space there and there, but other than that, it's fluctuating and looking pretty good. All right, now let's do the bears. This is a bear pennant that's no good. You see you got the pole, and then you got single days inside of the symmetrical triangle look, so that's not going to work. Same thing here. This is the little one. Decent pole, got your gap, just bad price action on that pennant, that bear pennant. Alright, I don't know if I showed this one or not, I can't remember, but nice pull, price action hugs it pretty good, a little something funky here, but that's fine. Nice fluctuations within the pennant, and then you got the pennant going up, you got the pennant going down, and that'll work just fine. And this is bearish, it should have broken down, but it didn't. It broke up, but that's going to happen. But this is a very nice bearish pennant. Alright? So that's it for the webinar on flags and pennants. All you're going to be looking for is flags. I'll probably ask for a few different types of flags, only appropriate ones, of course. And pennants, I'll probably ask for a couple types of pennants, meaning ones that look like symmetrical triangles to the point, and ones that don't on the bearish side. But these are great patterns. Some of the top trading patterns out of all traders, and as I pointed out, you just saw the #1 best performing pattern on the entire stock market, the high and tight bull flag opposite tilt. Good luck.